come year two, you get hit with your tax bill, you get hit with your installments, you get hit with everything, and they're caught with their pants down. Hello and welcome to another episode of the Solve2Evolve Podcast. I'm your host, Phil. I'm joined by Bloxy today. And you might be wondering, where the hell have we been? Well, we've been under a rock the last few months, pumping through the busy period. But now we've got some time to get back into creating more content for our viewers and listeners. So in today's episode, we just wanted to talk about the top 5 things that you should consider or think about before entering into a franchise business. So the first thing we want to think about is the geography. So when we think about franchises or business generally, when they look to grow and scale quickly because they have a well-established brand, they think about franchising as an option. And that means individuals out there can have the opportunity to jump into a well-established business, brand, and be able to run a successful business straight off the bat. But this means that they are also limited to geography. So they can only operate with certain locations before they breach certain geography. So you want to consider that. What you also want to consider is the demographic of the location that you're going to buy into. Is that demographic going to, or do they want to buy the service or the product that you're offering? You also want to think about the competition. Now, if you're buying into a gym franchise, for example, not gyms, but a gym like a BFT or F45 or one of those, in that particular location, how much competition are there 4 or 5 other? If so, probably don't get into it, right? Think about also, or actually go to the location and sit down and watch the traffic. Is there a lot of people going in and out? The other thing to consider is the operating cost. Each location, we work with quite a lot of franchises. Some will have higher operating costs than others due to the location, and that's because some might be operating where there's a lot of tolls, for example, no parking, and that will all obviously cost them time. So you want to think of those things when it comes to buying into a franchise.
Yeah, I'd definitely second that, Phil. That's the first, probably the key point. If you compare the geography of a gym franchise to the geography of, for example, a mobile tool salesman franchise, they're very different aspects of the geography are going to be critical factors, because with a gym, it's all based on people who are local going to the gym. Whereas with, say, a mobile franchise where you're mobile, like, for example, in a truck, as Phil alluded to, access to the customers and parking the truck is going to be more important than the socio-economic kind of level of the people who live in that area. I would totally second the proposition that the first thing that any franchisee should be thinking about if and when they choose to sign a franchise agreement is the geography of their franchise area. It's critical. If you get that wrong, you can have a completely different experience compared to a franchisee quite literally next door.
100%. It's so important.
Actually, the most important.
Yeah, I'd say that. To your point, what doesn't show up on the financial information, especially for a mobile business, if you're traveling around and you have to travel quite a lot, what you're losing is time in front of the client.
Yeah, correct. And that would also apply to a franchise, which is service as well. So, for example, a pretty big one is like a mowing, like a gym's, or dog washing, or you need to make sure that you're in an area that you can reliably service in a low-cost way.
Yep.
Because the traffic and the parking in a city area, even though there's a more density of dogs living in apartments that might need to be shaved more often, if you can't park your car out the front because no parking anywhere, that you have to have agreements with the SADA bodies so that you can drive onto premises to do the work. Is that all in place? Geography is so important. It's almost everything, like a McDonald's store. You don't want to set it up in the middle of an area that is predominantly, for example, Vietnamese, because the locals prefer eating Vietnamese street food.
That's right.
And often people who come in will want to eat fresh, like Vietnam, culturally different stuff.
Yep.
The importance in any franchise that you consider the geography.
So if you are considering buying into franchise, geography is important. There's so many elements to consider in that.
Yeah, and it really depends on the business. A gym versus a fast food store versus a service like a dog or a mowing, also different.
Now you've decided, okay, I want to buy a franchise in this particular location. What's your next step? The second thing you should think about, should seriously do, is speak to existing franchisees, and more specifically, speaking to the higher performing franchisees. Majority of the time, the franchisor will give you access to other franchisees' details. It's important. It's up to you then to grab that by both hands, call everyone and understand, get firsthand insights on how to operate that particular franchise, really know the ins and outs of it. If you're speaking to those that are successful in the franchise, then you know that you're speaking to someone with proven success and they can show you the ropes on what to do. They can also give you details on the challenges that they face or that you would be expected to face when jumping into this particular franchise. They also know the operation know-how. So, you jump into a business, any business, it takes you quite a long time to learn things. If you've got an experienced person that comes in like a mentor or a successful franchisee, they can show you the shortcuts and really just trim that time down. So that's very important.
Yeah, absolutely. They're an absolute stock of knowledge, and they're often more than willing to spend their time talking to you because it will make their brand stronger. If they're seen as a leader in the network, that is not so much a prestige thing for them, but that's a good thing for them because then their network will expand.
Yep.
If you're considering buying whatever the franchise is, speak to the franchisor, speak to the other franchisees as well. Often you'll have a very long lead-in time. So it won't be just, sign on the contract now, here's your shop or here's your area. Joining a franchise network, the ones that we're familiar with, it takes a long time.
Yep.
So it's quite a process. And as part of that process, like Phil said, you will come into contact with a ton of other franchisees and people who work inside the franchisor who may have been franchisees in the past or who may be aiming to be franchisees, and ask them, what do you think about the geography that's being offered to me? Why is the person vacating? Why is the person vacating this geography? And they'll often tell you answers that will lead you on a different path.
And those answers are going to come from the franchisor as well, because obviously they want to fill that area. But speaking to someone within, or a franchisee within that franchise, you're just going to get knowledge or information, and they're going to really give you realistic expectations as well. Franchisors are generally going to sell you the dream, but someone that's already done it will tell you, hey, year one's going to be really tough, year two will get better.
Yep.
If it doesn't, then you probably should get out. And that's with anything, right? When you try to sell anything, you're going to prop up what you're trying to sell.
And if you're coming in as well, there's a psychological tendency to want to think the best, to want to look at the best scenario and outcome for whatever money you're paying to a franchise, which in some cases is hundreds of thousands of dollars. So to inject an element of realism into the decision making, there's no better person to talk to than the top performing franchisee or your neighboring.
Yep. Just make a concerted effort to speak to them.
Yeah, all of the ones around your area as close as possible, get in touch.
So those two things are covered. We move on to the third thing. You've spoken to the franchisee, you've gone, okay, this all sounds great. I actually can do it and I will do it. I want to do it. What's next? The third thing you should be doing is seeking out a great accountant to partner with. What are they going to do? In most cases, what they should be doing, if you are purchasing an existing franchise, they're going to help you with financial due diligence to make sure that the historical numbers are what they are and that they're accurate, and just to make sure that you're buying into a business that is worth it for you. So you're going to have an understanding then of, and working with that accountant, an understanding of also the financial commitment, as Bloxy alludes. Some franchises can cost up to $500,000 to get into, some even more. Some can cost as little as $40,000, even less than that. You got to understand what the financial commitment is. The accountant will help you with that. At that point in time, they will also advise you your return on investment. Right? So is that going to take me 5 years to get my money back before I can then start to make a lot more profits? They will give you that answer. The other thing you'd probably want to know getting into any business, especially a franchise, is your break even. How much do I have to sell to break even? And more specifically, a cash flow break even, because if you're going to get into a $500,000 franchise, more than likely you'll have finance. And so you're going to have loan repayments going out. That's why a cash flow break even is important. So you understand how much money you need to come in to cover all the money that's going out, not just expenses, money going out. So that's very important. What I'd also say is pre-purchase assessment has been completed by that accountant and yourself, and you're happy to go. A good accountant will also hold your hand moving forward. So that means they're helping you with all the compliance from accounting to tax, bookkeeping, but also more importantly, cash flow management. And so this means you are stepping into a franchise, which in most cases is an established brand. So you're walking into a profitable business straight away. And what people don't realize and what we've seen quite a lot is they will profit substantially and they don't think about the tax that's coming up in year 2. And what do? They go and spend all that cash in year 1. Come year 2, you get hit with your tax bill, you get hit with your installments, you get hit with everything, and they're caught with their pants down. So having a good accountant to manage your cash flow, but more specifically the tax that you've got to pay, especially in a franchise, is very important because you're walking into an established business.
Yeah, and often whatever you're selling, the brand will sell itself. It's been so powerful, and that's proved by the fact that they can expand through the franchise model.
Mm-hmm.
Yeah, think of the fast food ones, or the people will know what they're looking at as soon as they look at it. So it's not like you have to build a market presence. Phil said you're already there, and that generates immediate cash flow and profit, and therefore not understanding the tax implications of that can lead to cash flow problems. We see it not all the time, but fairly frequently.
Yep. And finally, a good accountant will help you with your tax planning. Let's just take myself and Chris, for example. How do we help our franchisees? I would generally hold their hand and be more operational with them to help them pre-purchase assessment, but also then the ongoing accounting and advisory cash flow management work. And ideally, we want to make sure that they are maximizing the profits. Then come year end, we've got Chris that steps in and helps with the tax planning and helps with extraction of profits in a tax efficient way.
Even before that, Phil, like we've also got another arm that does like expert bookkeeping for franchisees. It's a team. You have to, if you are considering becoming a franchisee in whatever franchise, you have to look at the people in the firm that you're engaging for the accounting work and say, who does what? What does the engagement look like? And if they don't have a team of people working together, it becomes very hard for that accountant to service your needs, because it's like Phil said, it's not only the break-evens and the financial analytics that Phil's team handles. There's also another team that handles the day-to-day bookkeeping, the BAS lodgements, and then there's another team, my team, that handles the tax accounting. So there's a lot of people that have expertise on your business model, and that's very important to assess when you're assessing whether or not the accountant that you're going to is suitable. Again, come back to the second point, the leading franchisees network, they are already going to be dealing with switched on people who they're probably happy with.
Correct.
See if there's an expert accountant that can help you, or expert firm that can help you from all different aspects of accounting that's required.
Yeah. The last point I'd say to that as well, when thinking about seeking an accountant to partner up with, is has that accountant work with other franchises, or more specifically, the franchise that you're getting into now? If they do, that's going to be an added bonus, because that accountant would have seen a lot of other franchisees, and they will then also be able to help you, provide you with more information about the ins and outs of that franchise itself, because they've seen everyone else.
Thanks, Phil. So probably my top point in terms of entering into a franchise is to not use a trust. So a trust is a structure where there's a trustee and then there's beneficiaries of the trust. Now, many jobs that cross our desk that are substandard and that we end up taking over the accounting work for is because people have been put into inefficient and expensive structures that are not appropriate for small business to run through. Our experience, and this leads on to the second point, it's always better to operate through a simple $2 trading company. If you want to split income, dividend access shares to your partner or other family members who are not working, who are over 18. But using a trust in almost every situation in franchises that we've seen is suboptimal and overly complex for what you're trying to achieve as a small business person.
And I think to your point there, most people don't understand the structures that they are getting into.
Yes. Absolutely.
And so simplicity is key. What we've seen recently, and you can share more to our audience, but there was a franchisee who had a trust structure and they were up for renewal and they weren't able, or I think they figured out that they had the wrong entity.
That's happened more than once. And that's part of the problem, that the franchisor had actually lost track of who they were dealing with. So they were actually writing contracts to what's called just a bare trustee company that was completely separate to the identifiers, tax file number and the ABN for the trust itself. So the actual franchise agreement was effectively defunct. Like all of the financing and the trading stock trade that was happening with a company that was set up incorrectly as a bare trustee, but it had an ABN and a TFN. And so all of the franchise documents were legally wrong. So none of the debts from the franchisor to the franchisee could be enforced against the trust because the structure was set up incorrectly years ago when the joining documents were all signed. Now that we can sit here and chuckle about that, it's quite serious. So again, like not using trusts is one way to sidestep all of those problems.
But also it's keeping it simple, right?
Yeah, simplicity is.
So if you are then suggesting Bloxy to, rather than use a trust, but to use a company, why use a company?
Yep. So the benefits of the company are that it is generally more simple than a trust. You have an ownership register that is on ASIC, it's easy to see, and people understand companies a little bit better. Probably the next point that I would say, though, in relation to that is that if you are ever going to trade through a company, whether you're a franchise or a prospective franchisee or not, you need to understand the dividend imputation system. So franking credits is a really important thing to understand. And most people don't get it. I've explained it a million times.
I think.
Smart people don't get dividend imputation, but effectively what it means is that companies don't pay income tax in this country, or that they pay it. They do pay income tax, but then it's refunded to you, or like it can be attached to dividends. So I won't get into it in detail now, but if you are a prospective franchisee and you are listening to this, I would urge you to just type franking credits or dividend imputation, ATO, into Google, have a read about it. YouTube, It has very real implications for any business person who is going to operate through a company. And please, if there's one tip that I could give you to understand about operating a business through a company in Australia, it's before you even start, just read up a bit on the franking credits and how they're going to affect your return in the future.
Excellent, guys. So that was the top 5 things to consider. But whilst we were sitting here, I thought about the 6th one. So this is a bonus one for you guys, which I think is also very important. The 6th thing you should consider is your exit plan. Why is that important? You could jump into a franchise and the franchisor sold you the dream, but you go into it and you realize this is absolutely not it. The total opposite. And now you're screwed. You're locked into a 5-6 year term. What do? How do you get out? You're losing money. So before you actually sign that agreement, think about that exit plan. You're probably wanting to speak to a solicitor to review that franchisee agreement to make sure that there are exit clauses that you can tap into without having any sort of big financial implications or impact. So,
and sometimes you can't even plan for it. Sometimes you might have a family emergency. There might be mental health issues. There might be other reasons why you need to exit franchise. You need to understand how that will work mid-term and how much it's going to cost you. And importantly on that, from a tax perspective for me, is making sure that you trade up to the date when you exit, because if there is an incoming franchisee, then your exit is GST free. So if you have big assets that need to be unsold, you don't have to absorb the GST on that. So it's very important to trade up. Your going concern has to be trading right up until the date when all that should be covered in the agreement.
That's right. But once again, the reason why I emphasize this point on franchises is because of, given the history of franchises collapsing, many of them, especially in the hospitality and hospitality and health, I would definitely strongly advise that you think about the exit plan and really look into that before entering into it in case things go sour. And that's all we have time for today. Hopefully you guys enjoyed this episode. If you want to contact us, please reach out to us at podcast@solveaccounting.com.au or follow us on LinkedIn. Otherwise, stay tuned for the next episode. Thank you.